Welcome to the daily update, where I'll go over the action in the market for Monday, June 23rd, and we'll see how things look for Tuesday, June 24th. Before diving into today's video, if you find it helpful, consider a 30-day free trial to the SPX investing program. This trial lets you explore my unique approach to market analysis. Full-length daily and weekly videos are available on a delayed basis after the market closes. For immediate access, become a member by clicking on the link below. You got to hand it to the market right now. We did gap lower Sunday evening with the futures, but that was pretty much it. We were able to bounce up from that and see some gains. Europe didn't have all that good of a day, but the S&P Futures held in there. We had a flat open, and we saw a wave of buying coming in right after the open. We pulled back on some fears that hit the market there for a while, but once those fears went away, we went back up and saw a pretty solid day. Unfortunately, we're still not trending. We're still leaning more positive in the short, intermediate, and long term, but the market is kind of back to where it's been before. So we'll see. Can we start to build on something from this, or are we going to continue to just chop along with really no conviction? Also, for the first time in quite a while, we saw volume above average when it wasn't a special day like options expiration or the end of the month or something like that. So a little bit more conviction came in, but we're seeing some mixed signals now where after Friday we were leaning more negative and it looked like, okay, the market is going to have to digest what geopolitical events happened over the weekend that are still continuing to unfold, and it did a pretty good job of that. Okay, so right at the open, we had a flat open with prices climbing above the daily pivot at 59.80. So then we got back above 6,000 and we almost reached R1 at 6,007. Then we kind of topped out. It looked like, okay, the open is kind of finishing here. The smart money's going to come in and do some selling. But it didn't last, but it looked like that could be what was developing at the time. We declined back below the daily pivot, back below the unchanged level. We found support just a little bit above S1 at 59.14. Then here we go. This is when some strength started to come into the market. Prices rose back above the unchanged level, R1. It topped out for a little bit, but we were able to hold on to those gains, and then we climbed even going into the close and closed at about the 6,025 level. We were up 0.96%, and again, as I said, not much, but at least above average with what we've seen with volume lately. And we are still positive in the short, intermediate, and long term. And it's also kind of interesting to note, I'll point this out later, a lot of the consolidation or lack of trend and internal things going on, this is all taking place above the 20-period moving average. I noticed that as I was looking through the charts, and that's still holding on to this more positive backdrop. And interest rates did fall. That gave support to stocks. We still have the dollar that continues to show weakness. And of course, the geopolitical events with the U.S. going in and taking out nuclear facilities in Iran and then coming back. Of course, if you like Trump, you think that was a great thing. If you don't like Trump, you think that was a terrible thing. And that's kind of how divisive things are in American culture. Not about facts or anything like that. It's just whatever somebody does, if you don't like them, it's bad. If you do like them, it's good, kind of a thing. And there is some division that's happening even within the ranks where people that don't like Trump think maybe this was the right thing to do. People that do like Trump and usually support him, they think this was the bad thing to do. So seeing a little bit of a mixture compared to what we've been seeing before. Okay, some comments. The U.S., and I'm including that as part of the overall scenario now, U.S.-Israel-Iran conflict, because now the U.S. had become involved. We'll see if that's it. Is this as much as the U.S. is going to become involved? Iran says we're going to get you back, and what's going to happen from that. It seems to be contained for right now, and right as I got down or got ready to start recording, there's been talk of a ceasefire between Israel and Iran, which would likely also include the U.S. in that mix. And there wasn't any real major disruption to Middle East oil supplies. Now, that may seem trivial, but the Strait of Hormuz, that's a very important geographical place that Iran can shut down without a lot of problems there. It's just 2 or 3 miles wide or something. But most U.S. oil doesn't come from there. It's other countries. And so that seems to be not the real tactic at this point, and that helped oil prices go back down. Also, stocks, once they were going up, we reversed when we got up around the 6,000 level and a little bit above that. Iran announced that they were preparing a missile strike on a U.S. base in, I call it Qatar, but people now, I guess, call it Qatar. This ended up happening, but in kind of a different move than what we've seen before. Iran actually pre-announced the strike. Usually, that's not really one of their tactics. The missiles were intercepted by Qatar's air defense system. There were no casualties or deaths. And so after that, when that news came out about what happened, there was a relief rally that carried the S&P back up to new session highs and back above 6,000, and we closed pretty much at the high for the day. Also, some more Fed news came out that Governor Bauman said that she would support a rate cut at the July meeting if inflation pressures remain contained. We still have some inflation data that's going to be coming out. Then last Friday, if you recall, Fed Governor Waller, who's also a voter, said that he thinks the Fed could cut rates at the July meeting. So you've got a couple people that are at least saying that. Now, what they're going to do when they actually get into the July meeting is yet to be determined. But that was taken as positive by the market. And Fed Chair Powell, twice a year, he has to go before a House committee, and then tomorrow he'll go over a Senate committee just to give some testimony. And it'll be interesting to see what, especially with the Q&A, he usually he gives the same prepared remarks right at the beginning. So once we hear them on Tuesday, they'll pretty much be the same on Wednesday, unless something big geopolitical happens. It's the Q&A that he might be asked some questions about things that might have an impact on what the market does. So after the close, Israel-Iran ceasefire was announced, and the futures were up the last I checked before I started recording, which is about 8 or 9 hours before the market gets set to open, is that they're taking this as positive, and we're up about 0.5% or so. So we'll keep an eye on that. We'll see how things develop in Europe, and then eventually going into the open in the U.S. session on Tuesday. So, and this is actually incorrect. Mega caps and semis, they didn't have a great day. This was more of the other areas that have been seeing some weakness that saw some strength in Monday's session. Then oil has now declined. We were in the mid 70s. We were 74 and change after Friday. We're back down to 68, which is still high, but coming down from an even higher level from where it was at. We're back below 20 with the VIX at 19.83. And then we still have some of our momentum oscillators that are looking extreme positive with the stochastics and the slope oscillator, but they're negative. They're still below their moving averages, but they're rolling over in extreme positive territory. Intermediate term, we still have the rate of change 50. That really dropped down, but it's still extreme. And the momentum oscillators, just one good up day is not really enough to change them, especially when they were headed down. And other than what we've said or talked about from different folks on the FOMC who go into those meetings, there's been no real change to the overall scenario with the Fed. The dollar was down, interest rates were down. We're at 4.32% with the 10-year yield under that 4.5% level that we've been keeping an eye on. And sentiment it actually ticked up. I should have changed this over to positive. It's at 57. We're one tick into positive territory where we were neutral after Friday at 55. We're still not trending though. I'll show you the short and intermediate term chart with that as well. Because of the update, our bias is positive. I'm still keeping the momentum at mixed, mainly because we're not trending right now, and we need more than just one day to see if things are going to really kick into gear. Okay, so I don't really have any charts to show with the economic reports because these are the types of reports where I just give the numbers and we kind of just keep it at that. But the global U.S. manufacturing, which nobody really seems to pay attention to, but I like to keep an eye on it. It came in at 52. When it's above 50, that shows expansion, and that's the same reading we saw last time. And then the services came in actually a little less than the previous reading at 53.1, where it was at 53.7. Existing home sales, they were up 0.8% on a month-over-month basis. When you annualize that, that's 4.03 million, which is greater than the 3.94 million they had expected. The last time this annualized out to 4 million, so up a little bit from that, but sales were down 0.7% when you go a year ago and compare. All right, so no charts there. Some Isabel Net blog charts, consolidated equity positioning coming down a little bit, still below the zero level. So folks, according to this, are more net sellers rather than net buyers, but it had been improving. But with the sideways chop that we've been seeing lately, there has been some money being taken out of the market. And then Goldman Sachs top-down forecasts. Okay, they're still looking more positive here going out into the future, and they're also keeping their earnings projections at going up from where they're at. Then exposure to gold coming down a little bit. Gold's been just kind of chopping along sideways. And it was up in Monday's session, but not up as much as you would think. Gold, people tend to flock to gold when big geopolitical events happen. Then the buybacks. Now, this is seen as something really positive that happens in the market. The announced buybacks are coming down, but they're still quite positive after we were getting a really strong reading with that. And then they seem to be giving a lot of these charts lately. We look at the PE ratio, and I made a statement over the weekend that we use these static numbers of 10, 15, and 20, and we have forever. And I'm wondering maybe there needs to be a little adjustment to that because we've been overvalued on a price to earnings ratio basis, whether you look historically or looking forward. We've been expensive for years now, and the market spends years at a time. That's why we can't really use this as a timing mechanism. Maybe there's some kind of a dynamic approach that actually adjusts with some of the other indicators that I look at where, okay, when this was first created, the static numbers worked, and a lot of people still focus on that, maybe still looking at the static numbers, but using it in a little bit more dynamic where you have either some kind of Bollinger Bands or Keltner Bands or standard deviation plots or something like that to make it a little bit more dynamic, to change as the overall climate of the market changes. But we still have the NASDAQ 100 being quite expensive above that 20 level. And again, this is different than what I see. The Russell 2000 is still considered to be expensive, and it really hasn't gone anywhere in 2025. It's been frustrating over the last few years. But the chart that I look at over the weekend has it down actually under 15 right now. But that's mainly the S&P 600, which is the other small cap index. Then you have the S&P, which is above that 20 level at 22. The equal weight, the rest of the S&P, because it's mainly the mega caps that make the S&P 500 overvalued. It's more fairly priced when you use the equal weight version, and then the mid caps, which also are not going anywhere. And usually when I do the weekend video, the intermarket analysis video, we have mid caps and small caps pretty close to each other, where they're more fairly priced now. All right, then this is a Bloomberg chart. Stocks have been stuck in a rut, and that's why we're not trending. That's why we implement sideways strategies when this kind of a thing happens, because we were kind of at the higher end of this recent range after Monday's session. We'll see if we can break out of that to the upside, or are we going to continue to chop along sideways? Then the earnings per share growth, here's for the S&P, looking now in 2025 down, but still projecting it to be higher going forward, and that justifies prices going up. And we see that pretty much across the board here, whether we look at the equal weight, the NASDAQ 100 mid caps, and then they're really optimistic about small caps, but that optimism seems to fade as we get closer and closer to that being the actual time period we're going through. Mastering the stock market is challenging and can take decades to achieve. Most beginner traders and investors feel overwhelmed and often fail. Stay ahead with the SPX investing program. Members gain access to the full program. Other options include immediate access to videos as they become available. Alternatively, the daily and weekly newsletters may be helpful. Click on the link below to find out what's best for you. All right, so here is the chart. And we did have pretty much a flat open, but right after that, folks just came in and started buying. There wasn't even a dip. They just came in and started buying. Almost got up to R1, and then we started to drift down. Things were turning more negative. Uh-oh, Iran's going to attack this U.S. base in Qatar. And then we saw things start to drift down. We almost got down to S1. We built up a bit of a base here. And then this is when the smart money came in and said, okay, we're going to buy today. And they took us back above the unchanged level, the daily pivot. We got above R1 and just kind of set a base above R1 and then saw some buying going into the close. So this is a fairly healthy looking chart. Can we see more follow through from this is what we're asking. And then when we first opened with the future Sunday evening, we gapped down and then spent a lot of the time just coming back. Then by the time things opened, we saw the initial up move, the pullback, and then the strength going into the close. And then we are up, as I said, about 0.5% or so the last time I checked in the initial overnight session. So what's coming out, at least at this point, it could change at any time, but what's coming out right now is that things are being taken as positive. And still holding up okay, but we're not seeing much of a difference here between the blue line and the red line. But both growth and value were up in Monday's session and not really breaking out, but not breaking down either when we look at growth to value intraday for the S&P. So our end of day charts, we had growth up more than value, but for the mid caps, it was up less and it was up just a little bit more for the small caps. So we're coming down a little bit, but still looking solid overall with our small cap growth to value ratio, mid cap growth to value ratio, and coming back up, but just chopping along sideways here recently with the S&P growth to value ratio, and still kind of chopping along with our growth to value ratio looking at these ETFs. We're still above the 200-day moving average when we look at the discretionary versus staples ratio. So that's holding up, but it's not showing an awful lot of strength currently. And here's the trend in the short term. We're still declining with the ADX because we had a down day on Monday, then an up day on Friday. The ADX is not sure what to do, so it goes down because it's not really picking up a lot of conviction. And you can see here where we had this upward bias and then we started to drift lower, and now we're just kind of coming back into the recent range where we were before. Now, I pointed out over the weekend, too, that we were getting really close to a negative cross. That hasn't happened yet. The green line is still above the red line, even though everything is still below 20. And the green line is still above the red line here in the intermediate term chart, but the ADX is continuing to decline. Volume for 2 days in a row, we've actually seen volume above average. Now, Friday was quadruple or triple or whatever you want to call it, witching for options. That's why we saw the massive spike here. But we did see above average volume. Not very much, but different than what we've seen lately. We get this every week. With looking at sentiment, we're up still in the more positive area where we've been in the high neutral to low positive area with the chart that we look at every day. This is actually more bearish. These are legal insider transactions. We're getting a bit of a spike up here, which tends to be more negative for stocks. And when I show that, and I remember to do it, I like to show the insider buying ETF, which is now in an uptrend. but it's been chopping more or less sideways recently like everything else. We're back below 20 with the VIX. Not very much, but we are back down below. And so when the VIX declines, we see the VIX of the VIX also declining, but still above the moving averages. Since we've been going back up with the VIX here, the momentum as measured by the MACD continues to go up as well. And we're back up in the red area again with the skew index. This is a variation of the VIX. We came up into the red area, then after Friday we dropped down. After Monday we're going back up. So the market is still expecting some kind of a big move. We're not really sure if that's an up move or a down move. It's just we're seeing a lot of out of the money option action, which means that, okay, either calls or puts, which people get into when they're expecting some kind of event or movement in the market to actually happen. And we're up just a little bit with this fear gauge and down with this other fear gauge. So not any real confirmation there. For the most part, even though we declined a bit here with the risk on to risk off ratio, it declined, it was down 0.2%, but it's still been going up. And when this is going up, that means it's more risk on, which is more positive. And not much of a change. We saw a big move down after Friday with the equity put call chart, and it's pretty much flat in Monday's session. So we're starting to come back down with the 5-day chart and the 10-day chart, which when this is going down, that's taken as more positive. And we're still going up here with the volatility risk premium. We're still above the band that we usually follow. All right, and the advanced decline line looking good based on price. We did turn up. We're actually coming in again and setting a new all-time high based on volume. So that's still holding up fairly well. We declined, but we're still above zero with the 10-day advanced decline oscillator. We're back above zero with the short-term advanced decline ratio and going back up slightly with the red line as well. So that's looking more positive. We're still declining with the 5-day and 10-day moving average of the new highs, new lows. Saw a little bit more of an expansion of the new highs and really not much in the way of new lows here. But if this can continue and we see more green than red, that's going to turn these other moving averages back to positive, but it's not there yet. We were negative with the accumulation distribution after Friday. We dropped below the red line. Now we're back above the red line. So in the longer term, this is positive, and we're turning back up and across the moving average with the boom indicator. That's shorter term. So both of these are now positive. We're flat with the chicken money flow. We saw the histogram go up after the red line had been coming down, but we haven't actually turned up yet. And we did tick up with the Chaikin oscillator, but we're not above the moving average yet. So this is still treated as negative. We're positive with the vortex, and this is interesting. We had an up day, but yet the green line came down and the red line's going up. But still, the green line is above the red line. We're still above all of the moving averages, even with the small caps, with our advanced decline line studies across the different indexes. We're back above 50 with those stocks in the S&P above their 20-period moving average. We have been holding up better with those stocks above their 50-period moving average and also with the 100-period moving average. It's the short-term 20-period and then the 200, which has been dancing above and below 50. And we're back above 50 with the 200-period moving average study. So it's getting a little hard to see because we already have the pivot points drawn in here for July. But we did have an update. Now, what I pointed out over the weekend is when we were coming up here, we were seeing higher highs and higher lows, and that seemed to be threatened after last week's action. Well, this could negate that if we can continue to go up. On the bottom, we are above the moving average with volume. Now, the moving average itself has been coming down, and so to get above average is not as big of a deal as it was before. We are above 50 and going up with the 20, 50, and 200 period moving averages on the S&P. We're no longer extreme negative with the Stochk RSI. We're above the midpoint and advancing with the Williams percent R, coming back up to the midpoint with the CCI 14 and turning back up above the midpoint with the CCI 20. We're going back up now with the short-term stochastic, turning up but still below the moving average with the intermediate short-term, still declining and extreme positive with the long short-term stochastic. Where we went slightly negative with the force index after Friday, now we're back to being slightly positive, but still below the midpoint here. And still looking a bit vulnerable with our short-term moving average. We're continuing to be below the green line and the blue line. So we need to get back above this and see these lines really start to turn up to see more strength in the short-term trend. And I wanted to point this out too, where I said earlier that it seems like a lot of this crazy sideways action, or what we call consolidation, it's all been taking place above the 20 period moving average, which is considered to be the short term. And that can be taken as positive. That's why we've maintained a positive stance during the last few weeks, but we're just not trending and we're just kind of chopping along sideways. We're barely into the +2 channel with our standard deviations chart and above the midpoint. So that's showing a bit of improvement there. And we ticked up a little bit and we're still above zero with the balance of power. And this, I could easily put this chart in the short term because we're watching the 10 period simple moving average now. We were coming down and the green fluorescent line was starting to flatten out. It's still flat now, but now we're a little bit above the short-term moving average. And the 20 period exponential moving average, this is another example of how we've been above that. That's acting as support. And we're back to looking more positive with the go, no go with the darker blue bars. We're above the midpoint with the highest high value chart. We're still looking positive on a trending basis with the Landry light as well as the proper order. And still showing a little bit of weakness though with the TTM squeeze. It's the darker shade of blue and this is continuing to decline. And this is the rate of change going back 50 periods, where you take the lows. Well, we're starting to come up in the calculation, so that's pushing this indicator down. But we're still slightly above this 10 level here. And we're just skating along slightly above zero with the ease of movement. We're just a little bit above zero now with the S&P McClellan oscillator. So you can't really see it. We're turning up a little bit more. It's obvious here based on volume, but we will, if we stay above zero, start to turn up with the summation index based on price. And we're coming up with the NYSE McClellan oscillator, but still slightly negative. So we're continuing to decline based on price and volume for the summation index for the NYSE. The Arun is still above zero with the oscillator. This measures the buyers who are green and the sellers who are red, and the oscillator is the difference between the two. That's still positive. And we're turning back up and looking positive again with the Swindler Trading Oscillator. We were declining after Friday. With Monday's upward move, we're turning back up. We're still below the midpoint here based on price. We've crossed back above the midpoint based on volume. But the momentum, it hasn't really kicked into gear yet. So we're still rolling over, but extreme positive with the PMO. We're continuing to decline based on price and volume. And we're climbing back up here with the PMOs that are rising, but we're still below 50. The buy signals are starting to turn up, and we're leveling off after declining with the PMOs that are above zero. We went from negative to positive with the Elder's Impulse system for the S&P, but we're still negative with the parabolic SAR with the dots on top. And we're still extreme. We're slightly above this green line here with the slope oscillator, and it's pretty much right on top of its moving average. But the MACD continues to decline. So the short term, both of the short term momentum oscillators continue to decline. And then our intermediate term oscillators, the MACD, PMO, and PPO, and the long term oscillators, I haven't seen any change here. These are still negative. And the Copic curve is flattening out, but still below its red line, so that is still negative. We're back up into the green area with the Sean trend meter, which is looking more positive. We're above 50 with the money flow. Now we fell below 50 with the ultimate oscillator, but now we're coming back above 50, so that's improving. We're still above the moving average with on-balance volume. That's still positive. We're still above 50 with the RSI 14 and the RSI 9. Then the intermediate term trend. This is looking a little bit more vulnerable now. We came down to the double exponential moving average, and that has been providing some support, at least in Monday's session. We need to get back above the red line, which moves faster, to have the intermediate term trend continue to go up. And we're above all the plotted moving averages here. And I know it looks like a spaghetti mess, but I try to keep them all on one chart to see if that gives us some perspective. But with the bullish percent index, we're still declining. It was still down in Monday's session, and it's below its moving average. We're still declining with the NYSE bullish percent index and declining after being extreme positive with the NASDAQ 100 bullish percent index. And still using part of this little mini rainbow here to act as support. We almost came down to the low of the moving average here, but we were able to close back above this. And starting out the new week, where we're still looking good with the weekly chart. So we're positive, at least so far, but this is just the first trading day of the week. And we're kind of getting some doji small candles here with the Heiken Ashi. We're negative still with the Kegi chart, positive with the Renko chart, but negative with the three-line break. So a mixed picture there. Long term, we're above the midpoint with the 150 and 200 period moving averages, showing some improvement. No changes here, still negative with the mid caps and small caps in the long term. Bonds are positive in the short term based on price. Commodities, most of this is oil, positive across all time frames, and the dollar continues to be negative across all time frames. And where energy had a good week last week, it was the main sector that was down in Monday's session. All of the other sectors were positive, and discretionary was actually the strongest. Now, can that continue? That's been the frustrating area in 2025. Communication was also up, as was tech. So we'll see if we can see a bit more conviction that lasts longer than one day. So the euro crossing below 115, that means the dollar was going up against it, where then the Nasdaq got below 19.4, but then it got back above 19.5 and eventually 19.6. The Dow ended up going below 42,000, but it actually ended up closing above its 200-day moving average. The materials, which have been seeing a little bit of weakness lately after seeing some strength, we had a BPI cross back below 80. And energy had a BPI cross back below 80 since it was down the most in Monday's session. A lot of green here, but you have Amazon down a little bit, Google down a little bit, but awful lot of green in the tech area. Financials looking pretty good, seeing some improvements there. Discretionary, and a lot of that had to do with Tesla having an up day. And then the communication, we had Meta up again as well. Seeing a little bit of an improvement here with the weighted versus equal weighted version of the S&P. I pointed out over the weekend that these are decoupling from each other. They're getting kind of far away, even though they're on different scales, which you could take that as positive, meaning that the mega caps are going to control the market. Well, they need to go up for the market to go up. This could be taken as negative when these get kind of far away from each other. That means there's not a lot of broad market participation. And we're back slightly above the 200-day moving average with the Dow. We've gone from negative to positive with the Elder's Impulse system for the diamonds. We're still above both of the moving averages here with the NASDAQ, and we've gone from negative to positive with the Elder's Impulse system. This is showing some promise, though. We're just about getting ready to see a golden cross with the NASDAQ 100. And if the NASDAQ 100 is doing well, then the S&P 500 is also doing well. And the Qs have gone from negative back to positive with the Elder's Impulse system, but the momentum for the NASDAQ 100 is still negative. And I wanted to show this. These are the triple Qs, the ETF for the NASDAQ 100. We're starting to see a golden cross. This is the 50-period moving average crossing above the 200. Small caps, they were up, but kind of back to where they've been before, and still below their 200-day moving average with the Russell 2000 small caps, but going from negative to positive with the Elder's Impulse system for the small caps, and mid caps were up, but still are pretty much range bound. Switching from negative to positive with the Elder's Impulse system. Financial sector was up. That's doing pretty good. And then we've been keeping an eye on the banks. They're back above their 200-day moving average. Now, they're still in a downtrend. The blue line's still below the red line, but really choppy lately, but at least showing a little bit of an improvement on Monday. And we are improving still here with the financials to S&P ratio. We came right down to the 200-day moving average, and we've been bouncing up off of that. So far, that's being taken as positive. And we're still above both of the moving averages with the Wilshire 5000 and the total U.S. stock ETF. The FANG index was up, but hasn't come back and set a new all-time high. It's been chopping along sideways as well. Amazon was down, but still above both moving averages. Apple was up and dealing with its 50-day moving average. Microsoft, bam, had a good day, setting a new all-time high. Meta was up as well, but really hasn't broken out of this recent range that it's been in. And Google was down, and it's also dealing with its 50-day moving average. Nvidia was up slightly, but above both moving averages. And Tesla was up 8.23%, but not quite ready to generate a golden cross, at least yet. And Netflix was up 1.8%. And as I keep saying every day now, this is probably the best looking of all the mega cap charts, at least the ones that I follow here. And seeing a little bit of an improvement here between US and world stocks on a short-term basis, leveling out after it's slowly been rising on a longer-term basis. And oil dropped. We're back down into this has us at 67.23. And the dollar continues to decline, which is actually helping stocks. And the Trueflation latest reading coming in at 2.16, where when we had CPI coming out last time, it was at 2.4. And we're still below this red line, which is the 4.5% level with the 10-year yield. We're still moving out above the 50-period moving average with the 10-year based on price. And seeing some improvement with our growth to value ratios, not as much as you would really expect, but we're still above the moving average with the Qs to S&P, coming back up to a declining moving average with discretionary to the S&P, and still dealing with the moving average when we look at large cap growth to value. So still a little bit under the moving average here with this measure of the large caps, above the moving average with the mid caps, and still declining below the moving average with the small caps. So what's the outlook then? No changes to this. We're positive on all time frames, but not trending. We're going to get the current account balance, the FHFA Housing Price Index, the S&P Case-Shiller Home Price Index, and consumer confidence. None of these are real major in and of themselves, but it'll give us a good idea of what's going on with the economy. And then, of course, anything geopolitical as it develops between Israel and Iran, the U.S. and Iran, and then there's still Russia, Ukraine in the background, and anything else that could develop. Here is the economic calendar for Tuesday. Not much in the way of anything big on Wednesday, but then we'll get initial jobless claims on Thursday, durable goods. We'll get the third look at GDP on Thursday to see how that's coming out. The big inflation day is going to be on Friday with the personal income and spending as well as core PCE. And then consumer sentiment's been kind of a big deal lately too. So here's a look at Tuesday's calendar. Seasonality is not very good for June 24th. We're like quite negative now on all of the different indexes here. My gosh, the NASDAQ has only been up 19% of the time going back to 2002. So be aware of that. I mean, this isn't 100% down, so it means we do have some up days along the way, but for some reason the market doesn't like June 24th. All right. Oh, and then we're also in the week after options expiration, where going back to 1980, we tend to be down more than we are up. And then here is the calendar where we're finally coming into a little bit of post-election year positive seasonality that might help things going into the latter part of June. Then here's another new chart, late June, early July. Weakness is normal in a post-election year. Okay. Tell that to Monday. Didn't seem to happen. And then this is also put up by Stock Traders Almanac, where we typically see a nice little rally the first part of July. That doesn't mean it's going to happen, but this is what we have seen happen before. With each video and course, members learn to implement the consensus approach, a unique analytical method. Unlike relying on a few indicators that eventually fail, this approach overcomes analysis paralysis by using the weight of the evidence to draw conclusions. Developed over decades across all market conditions, explore the SPX investing program and start with a 30-day free trial. All right, and then I still have this on the negative side because we're getting a mixed picture. The accumulation distribution is positive, but the Chaikin money's flow is flat with the Chaikin oscillator continuing to be negative. It came up, but it's still below its moving average. The discretionary to staples ratio still in a downtrend there. The NYSE McClellan oscillator and summation index still below zero. Parabolic SCR is negative, as is the bullish percent index, the momentum oscillators, the Kopic curve, and the long-term special K chart that I show in the deep dive video over the weekend, as well as the momentum for the NASDAQ 100. Positive sign is we're in an uptrend now with the growth to value ratio for the S&P, and we're slightly above zero with the McClellan oscillator, which even though you couldn't see it on the chart, we're turning up a little bit based on volume, but you couldn't see it when we are turning up based on price. And the bullish percent indexes for the NASDAQ 100 and NYSE, they're above 50. That's why they're considered positive, but they are declining. And the swell trading oscillators now positive. And the ease of movement, the money flow, the ultimate oscillator was on the negative side. Now it's back on the positive side. And the vortex is positive as well. And the financial sector is positive. Here are the pivot points for Tuesday's session. We've got kind of a wide range here of support and resistance levels. So the conclusion has not been changed now for the last number of weeks here. Positive on all time frames, but not trending. Thank you. I hope you had a really nice weekend. I hope you have a good day on Tuesday, and I will talk to you in the next video.